Welcome to the webinar this afternoon. So this afternoon, like I said earlier, we'll be discussing about share reconstruction and its implication for investors. And also we'll have the privilege of carrying you through into 2025 on how you can make money and how that you can have secure investment in the coming year. And today, without further ado, I have my colleagues here that will be taking us through step-by-step practical means on how AfriInvest is going to put you through about your share reconstruction and what is in it for you. What do you gain? What do you lose? How does it help you make more money? Is there any opportunities for you in it? And also, how you want your 2025 to look like, whether you want to diversify what you want to do and opportunities that lies in wait for you in the coming year. And so we have Olumayowa Bolujoko here, who will be taking us through, and we also have Margaret Onuachu, who will also be taking us through. Olumayowa will be taking us through the share reconstruction process, while Margaret will be putting us through opportunities that lies ahead of us in 2025. So over to you, Mayowa. Thank you.
Thank you very much, Blessing. Can you kindly confirm you can hear me? Hello, Blessing. Can you confirm you can hear me?
Yes, Mayowa, we can. You can go ahead.
Okay. Good afternoon, everyone. My name is Olumayowa, and I'll be taking you through share reconstruction and its implication for investors. However, we've been receiving series of questions as to related concepts regarding share reconstruction. And in the times we are in, we've seen different corporate action common in the market, and we would like to answer some of the questions that we've gotten so far. First off, we've had questions around bonus shares. Recently, a company called United Capital did a 2-for-1 bonus shares. By the way, bonus shares are additional shares given to existing shareholders free of charge. It doesn't cost you anything. The company hands you the share for free. And in the case of United Capital, they declared a 2-for-1 bonus share. Just look at it, 2-for-1. It means that they are giving you 2 for everyone you have, 2-for-1. So also in the case of United Capital, they declared an interim dividend of 90 kobo. And so it was interesting that an investor went to bed the previous day to the ex-div date, that is the markdown date. And the person saw the share price at 31 naira, and he was hoping that, okay, because he has learned from one of our webinars that they usually mark the price down. They deduct the value of the dividend on the ex-div date from the share price, the previous closing date. So he calculated that the share price will be 30 naira, 10 kobo. That was absolutely correct. But waking up the next day and looking through the market, he saw that the price opened 10 naira, 5 kobo. How did they come about that? And I'm sure so many of you on the call also, or some people on the call too, might have similar questions or might be wondering how they came about that share price. So we're going to speak to that now. When a company declares the dividend, they usually the dividend is taken out of the share price on the qualification date. So the qualification date is the date in which, if your name appears on the register, you automatically qualify for dividend. After the company takes out the interim dividend or the dividend that is declared, we call that an ex-div price. However, in the case of United Capital, it was a 2-for-1 bonus share. Remember, 2-for-1. For every one share you have, you get two. So it simply means that you now have 3 shares. 3 plus 2 plus 1 equals 3, meaning 3. So that ex-div price, that is the price the price after dividend has been deducted, divided by the 3 new shares, give 10.05 approximately. That is 10 naira 5 kobo. So for people who have been asking questions, I hope I've been able to clarify that. Also, we've been seeing wave of questions as to my rights. Some people will say that I can't see my Fidelity shares in my AfriInvestor app, or I can't see my Access Bank, I can't see my Zenith Bank. Those are genuine concerns. For example, Fidelity Bank, the public offer was around 9 naira 75 kobo, and the right was 9 naira 25 kobo. So every investor that has been following the market will know that Fidelity Fidelity is doing above 15 naira. So people will always want to ask questions that I don't have these shares and the share is doing so well. So for rights, it's a primary market issue. But by the way, let me also mention that we have United Bank for Africa, UBA. The right is currently ongoing. We also have First Bank. The right is also ongoing. So if you qualify for those rights, you can as well start thinking of taking up the right as quickly as possible. So I was speaking to rights issues. Rights issues are primary market issues. That is, the company is selling directly to you. They are selling their shares directly to you. So for primary market issue, it usually goes through a process called allotment. After an allotment is done, then it will go for approval. The market is regulated, so it has to go through approval. After the approval is done, then the CSS can get the nod to credit the shares into your CSCS account, and subsequently you will see it in your Afro Investor app. So if you've not seen these shares in your Afro Investor app, you should just exercise more patience. You've not lost money. You're definitely, when this process is completed, the shares will be credited to your position, and you can take whatever decision you want to take on it. And next is stock splits, which is closely related to the concept we are discussing today, share reconstruction. So look at it this way. What does it mean to split something? Let's say I have just one object, let's say a biscuit, and I have two children I want to give to. I can break it into two. I've splitted it. So splitting simply means that you are increasing the number. So for stock split, it simply means that the company is increasing the number of outstanding shares, and automatically the price will be adjusted downward. So there's usually a reciprocal effect. So if the quantity is increasing, the price will fall by a proportionate amount called the multiple. Let me just break this a little bit further. Let's take, for example, a company decides to do a 2-for-1 stock split. Look at it, 2-for-1. So I'm sure many people now know how to interpret this. 2-for-1, it simply means that you're getting two for everyone you own in the company. Remember the example we painted on the bonus shares. So this is so similar, 2-for-1. So let's say the company is doing a 2-for-1 stock split, and the company currently has 2 million outstanding shares at 10 naira per share. For stock split, remember that we're increasing the outstanding shares. It simply means that the number of outstanding shares will increase. So it simply means here that the 2 million units will become 4 million units. That is 2 million times 2 becomes 4 million units. So the multiple we are working with here is 2. So also, the price needs to be adjusted downward. Remember, the opposite will happen to the price. Whatever happens to the outstanding shares, the opposite will happen to the price. So for this, the price will fall by a multiple of 2. So that is 10 divided by 2, that is 5. So let's look at these two scenarios now. We have a pre-stock split scenario, that is before the stock split happened. The total outstanding shares for the company was 2 million, and the price was 10 naira per share. So it simply means that the market capitalization, which is the number of outstanding shares times the price, is 20. So that is 2 times 10 equals 20. That's the market capitalization. If we now look at the post-stock split situation or scenario, it simply means that the new shares we have now, they are now 4 million, and the price has dropped to 5 million. So if you say 4 times 5, it's still 20. So basically nothing has changed here. And I know that you'll be wondering, what's this all about? Nothing has really changed. Market capitalization has remained the same. And now that we are familiar with these related concepts, it's now time for us to dive deep into a subject of discussion: share reconstruction. Okay, so share construction has different names. So some people will say that it's stock consolidation, or some people will say it's reverse stock split. Like I did explain earlier, the stock split is the opposite of a share reconstruction. So stock split, we said that the number of outstanding unit of shares would increase. So in a share reconstruction, opposite simply means that the outstanding number of shares will fall or will reduce. And the price, remember we said that the opposite will happen to the price. So what will happen to the price now is that the price will increase by that multiple. So let's paint a scenario. a company decides to do a 1-for-2 share reconstruction. So hold on a bit, let's process it together. 1-for-2. So it simply means that you are getting one for every two you have. So automatically that means that you had two before, they are giving you one. That means the unit of shares have actually reduced. So that is what a share reconstruction, stock consolidation, or reverse stock splits actually means. So this company has decided to do a 1-for-2 share reconstruction, and the company has 2 million shares outstanding. Now, if the company goes on with the share reconstruction, it simply means that 2 million shares divided by 2, the multiple we are working with here is 2 million, 2, that the multiple of 2, that is 2 million divided by 2, that is 1 million new shares. So the company has 1 million new shares. And the price, remember that the opposite will happen to the price. So the price will go upward. So the price now becomes 10 times 2, that is 20 naira per share. So let's look at the two scenarios again. First scenario, pre-share reconstruction, we had 2 million shares at 10 naira. 2 times 10, that's 20 million in market capitalization. Remember that market capitalization is number of outstanding shares times the price per share. Now, the post-reconstruction scenario now, we have 1 million new shares at 20 naira per share. That is 1 million times 20, that is 20 million naira. So that is the market value. New market value is 20 million naira. So basically nothing happens here also. Market capitalization has remained the same, just that outstanding shares has reduced while the price has increased by a proportionate multiple. I'm sure right now you're actually thinking that, so since market capitalization has not changed, why would a company want to do a share reconstruction? I will be answering that question now. So first reason why a company will want to do a share reconstruction is that they might want to improve market perception. So the way the market works is that market is driven by perception. Some people will say expectations. And there are some stocks called penny stocks. So if in the US, a penny stock is a stock that trades less than $5 rather. And that concept has actually been spread across different markets. And most market participants will we define a penny stock as a stock that trades less than 5, whatever the currency is. For in our case in Nigeria, we see less than 5 naira. So let's just stick with that school of thought that a stock that is less than 5 naira is a penny stock. Now, I did mention earlier that the market is driven by perception or expectation, and the thinking of most investors is that the share price actually reflects the value in the company. So if a company is trading less than 5, now let's say the company is trading at 42 kobo, it simply means that it might not be so attractive to many investors, so institutional investors, for example, or foreign portfolio investors, because the price is not really reflective of the value of the company. And if management sees that this company is a good company, we have a bright future, they can decide to do a share reconstruction to adjust the price upward so that the company can be in the spotlight. People can now begin to see the company and okay, this company's price is quite high, or the company's price is relatively okay. Then they can begin to show interest in the company. So one reason why a company wants to do a share reconstruction is to improve market perception. Next is enhanced liquidity. So this is quite related to the previous reason, that's improved market perception. So for enhanced liquidity, remember that we said that the company might want to attract new investors, we want to grow interest in the company. And the way it works is that as more people become interested in a company, the company's stock become liquid. So a company might want to make the stock appealing to investors, thereby improving trading activities on the company. Just think about it. There's some companies that every day you see on your price list, those companies are liquid companies. I don't mention names, but when you check your prices day in, day out, you know that this company must actually trade every day. So those are companies that are liquid. If the management of a company feels that the stock is not very, very liquid, they can decide to do a share reconstruction to make it more attractive. Next is to meet regulatory requirements. So a company might be mandated by its regulator to raise more money from the market, to increase its capital base. So one example that comes to mind was that sometime in 2019, Nikon announced a recapitalization, although the case ended up in court, but they did announce a recapitalization arrangement. And we saw companies in the insurance sector like Mazard, NEM, and Lasaku doing a share reconstruction. So that might be very connected to the new capital requirements. It might be very connected to it. So what a share reconstruction does is that it gives you a good reference price. So a good reference price simply means that, let's take, for example, a company is trading at 42 kobo, and the company comes to the market and says, we really need to raise a lot of money. And if they are raising the money at 42 kobo, it means that they need to sell a large unit of shares so that they can raise the expected amount they want to raise. But the management can sit back and say that, okay, let's do a share reconstruction. Remember, share reconstruction simply means that the price of the share will go up while the outstanding shares will reduce. So when the price goes up, it gives them a good reference to now raise money. If, for example, the company adjusts the price upward and it becomes, let's say, 1.68 kobo, for example, it is easier for the company to say that I want to raise money at 1.20 kobo or 1.15 kobo, as opposed when it was trading at 42 kobo. So share reconstruction might help a company raise money to meet regulatory requirements. Next is very related to the last explanation, that is it support funding efforts. When a company's price is up there, is they are able to raise more money easily than when the price is very low. So it speaks to that previous example of 42 kobo, adjustment upward of 1.68 kobo, then they are able to raise something around, able to raise more money around maybe like 1.20 kobo or 1.15 kobo. Now that we've explained reasons why a company might want to do a share reconstruction, I'm sure you know at Afro Invest, we're investor centric. We always want to speak to investors to let them know what the implication it is for what the implication of some corporate action, the implication of some corporate action on their investments, and how they should look at it so that they can take very good decisions. So the first implication we'll be speaking to is there's no change in value for share reconstruction. So let's paint this scenario. A company decides an investor, now we're talking to you as an investor. An investor has 500 units of a particular company at 2 naira per share. If you calculate the market value of that stock, it is 1,000 naira. That is 500 times 2. That is 1,000 naira. If a company now decides to do a 1-for-5 share reconstruction, look, let's break it down again. 1-for-5, what does that mean? I'm sure many people have answers to that question now. So that is, you are getting 1 for every 5 you have. It simply means that the number of shares you have now will reduce to 100 shares, and the price will move upward to 10 naira. Remember that the multiple here is 5. So it's just a quick by the sidelines. An investor sent an email recently and was saying that I have X unit of Transcorp PLC, Transcorp in my books or in my position, and afterwards I'm seeing that it has reduced. What happened? So to such a person, Transcorp did a 1-for-4. So that's why the value of the number of outstanding shares has reduced. But if you look at the share price of Transcorp, is trading around for something naira now. So that's the compensation you have for the reduction. So looking at these two scenarios very quickly, pre-reconstruction and post-reconstruction, the value of the portfolio is still worth 1,000 naira. That is, there's no change in value for you as an investor. Next is capital gains or loss. So another example, an investor was looking at her account and she saw that she had gains on a particular stock, about 350,000 naira, and she was saying that pay me my money. And I was like, ma, we can't pay you the money because that is an unrealized gain. Yes, it is there, but you need to sell so that you can bank that profit or you book the profit. So in that case, the person has to sell off. But coming down here right now to share reconstruction, nothing happens to your value. It doesn't go up or come down as at the point of share reconstruction. Meaning that if you are worth 1,000 naira, like in the previous example, you're still worth 1,000 naira. However, if this shares start trading, if the company start trading again, market sentiment can play in and the price can go either up or down, whichever way the market sentiment dictates. Okay, so next up is liquidity impact. Uh, next up is misleading stock price performance. Misleading stock price performance. So for investors, most people in the market, people that trade actively in the market, they'll tell you that buy the winners and sell the losers, meaning that you buy the companies that the price is going up and you sell the companies that the price is depreciating so that you can cut your losses and redeploy the funds into other viable stocks. So a company that has done share reconstruction, as an investor, you need to be careful as to how to calculate the year-to-date performance. So the year-to-date performance, which is abbreviated as YTD, is just looking at what the share price closed at in the previous year against what it is currently doing now. So you look at what the price is now, divided by the current price, divided by the price it closed at in the previous year, then you express it as a percentage. It gives you a year-to-date. So remember that pre-reconstruction, the share price is low. So if you and after reconstruction, that is post reconstruction, the share price will go up. So if you are using the pre-reconstruction price to calculate your year to date to give you a misleading figure, then you might think that that stock really has high potential. Then you go into the stock not knowing that there was a reconstruction that happened. So in this case, you need to also pay attention to companies that have done reconstruction and look at and ensure that when you are calculating your year-to-date performance, you are using the post-reconstruction price and not the pre-reconstruction price. And finally, like I said earlier, it helps to share construction helps to increase participation in the company, and it helps meaning that more investors are attracted to the company and the share price might begin to go up like most investors will want it to go up. So next off is looking at what some companies have done in the market, just a quick snapshot, and to recap all of the topic of discussion. First is Lasaco Assurance. So Lasaco Assurance did a 1-for-4 consolidation or share reconstruction. Let's look at it again. 1-for-4, meaning that you're getting one for every four you had earlier. So what happens to the price? I know so many people have answers to this already. So that is the price will go up 42 kobo times 4. That is 1 naira 68 kobo. And what happens to the outstanding shares? It will reduce share reconstruction. So for Lasaco, 7.3 billion shares became 1.8 billion shares. And finally, we saw that at some point in time in 2022, Lasaco came to the market to raise more money at 120 kobo per share. Just look at it, they were trading at 42 kobo before, and they've come to raise more money at 120 kobo. What gave them this privilege? Because of the share reconstruction, which adjusted the price upward to 1 naira 68 kobo. And also we have Wema Bank. Very quickly, Wema Bank did 1-for-3. And post reconstruction, the share price became 2.76. That's 2 naira 76 kobo. And the share price reduced. And the share price reduced to 12.8 billion shares. And subsequently, we saw some capital raise activity on Wema Bank. So these are charts just to show the movement of the price over time after reconstruction. Finally, having put all of these details together, I'm sure you'll be wondering, nothing has really changed in value for me. So why should I stay with a company, or why should I buy a company that wants to do a share reconstruction? So some of the considerations you need to make or look at as an investor is, number one, you need to look at why the company is undergoing a share reconstruction. If the ultimate aim is to raise more money and to inject into the company so that the company can perform better, you might want to you might want to look at that company and say, okay, this company might be a company to wait on, so that in the future when the performance improves, the share price will also move alongside. Remember, the market is driven based on expectation. Next is you need to analyze the financial health of the organization. So the impact of the share reconstruction, what does it have on the financial health? Does it improve the fundamentals of the company? Maybe does it improve will the revenue increase? Will earnings per share increase? And other indicators that you use to analyze the company, will it improve positively? If it will, you might want to stick with the company or position yourself in the company. And finally, when you're investing, you need to have a goal in mind. What's your goal? The goal wraps up all your actions in the market. It helps you tailor your actions appropriately. So if you are a long-term investor, you might really want to look at a company that is doing share reconstruction and position for the upside. And finally, if you want to do the short play, maybe you really want to just buy now and sell very quickly when the price goes up, you might really want to reconsider the impact of this share reconstruction on the performance of the company. So finally, let me just say that share reconstruction or not share reconstruction, the fundamental of the company is very, very important in your investment decision. That brings me to the end of this discussion, this section of the discussion. Over to you, Blessing.
Thank you, Mayowa. That was a very beautiful, insightful, practical presentation. Thank you for taking us through. Like it was what was needed at this hour. A whole lot of confusion, but you simplified it. Yeah, thank you so much. I will be moving ahead to how we can make money in 2025. I know everyone is happy right now. You want to seize these opportunities as Margaret Onuachu, one of our senior analysts here at AfriInvest, will be carrying each and every one of us through how we can make money. What are the opportunities? Is it only equities? Where can we always put our money in instead of putting it in the bank and we'll yield better results? So please just stick to your screen and invite everybody. And it's not too late for everybody to join in. Thank you. All right, Margaret, over to you.
Thank you very much, Blessing, for that warm introduction. And a very big thank you to Mayowa for doing justice to the first part of this presentation. It was awesome. I can see the comments and I can see that a lot of our presenters, our listeners are already eager to ask questions, and we'll get to that point. So now, discussing the investment opportunities that you should be looking at in 2025. I know that at the beginning of the year, when 2024 kickstarted, a lot of us made some paying down some investment resolutions that we are looking at, or financial resolutions, if I would say, that we are looking at achieving in 2024. So I'm checking on my investors, fellow investors. How is it going? Have you been able to achieve at least 90% or let's say 80% of what you had paid down to achieve? Or have you not? If you have achieved, congratulations. If you haven't, don't beat yourself. 2025 is almost around the corner, and this is the best time for you to understand the investment opportunities that are available for you to kickstart your investment journey in 2025. Now, the following products displayed on the screen are some of the offerings that we offer at AfriInvest Securities Limited. We have treasury bills and commercial paper, as well as term deposits, federal government savings bond, AfriTrack services, equities, which is one of our core businesses, federal government bonds, Sukuk bond, as well as corporate bonds. I'll be taking a little time to explain all these products as we proceed. So treasury bills are discounted instruments that are issued by CBN on behalf of federal government. So, we have a lot of times where federal government come out to the public to borrow funds to finance or to lend funds to finance their projects. So that is treasury bills. And for these instruments are always short-term instruments, and they are discounted. So they are no longer than 1 year. So they run through the period of 91, 182, and then 364 days. And also they pay interest upfront. Yeah, so while commercial papers are the corporate organization coming out to also lend funds from the public, that is you and I, investors, to finance their projects as well. And the minimum subscription for commercial papers are usually 5 million to 1 million, depending on the company that is issuing. It's also a discounted instrument, meaning that you can take your interest upfront, and upon maturity, you're going to get your capital. And speaking a little about treasury bills, is that this treasury bills is issued every first 2 weeks of once in every 2 weeks, right? And the minimum subscription in the primary market is 50 million 1,000, but in the secondary market, you can invest in treasury bills with as low as 100,000 naira. And this product is actually available on our Afri Investor 2.0 app from 11 a.m. to 2 p.m. You can key into these investment opportunities. Now we'll be moving to the next investment opportunity, which is the federal government savings bond. This product is a very, very interesting product that I love so much, because you don't have to say, I don't have 100,000, I don't have 5 million, I don't have 20 million, or other big figures. You can invest in FGN savings bond with as low as 5,000 naira. Yes, so this offer is tailored towards low-income earners, it's tailored towards salary earners, it's tailored towards in fact, any class of person can fit into this investment opportunity, right? So it is issued every first week in a new month. And I've also mentioned that the minimum subscription is 5 million, while the maximum you can invest as an individual or as an institution in FGN savings bond is 50 million. Another beautiful thing about FGN savings bond is that it's no longer than 3 years compared to FGN bond that is as long as 7 years, which we are going to discuss that as we move further in the presentation. For FGN savings bond, it is no longer than 3 years. So the tenors are always 2. Is either 2-year bond and a 3-year bond. And this instrument pays its coupons 4 times in a year. That is every quarter, meaning that you can actually use this investment option as a sort of a retirement plan, or if you're looking at projects, you can invest in it, knowing that at every quarter, at the end of every 3 months, you are going to be receiving your dividends. And also, FGN savings bond is quoted on CSCS, meaning that you must own a CSCS account for you to be able to subscribe to FGN savings bond. And how do you quickly do that? Is by picking up your phone, even as I speak now, to download Afri Investor 2.0 app, sign up, complete all the necessary KYC details, and in 24 to 48 hours, a CSCS account will be made available for you, so that the next FGN savings bond, which is going to be first week in December, we are almost approaching that, you have to set up your account and be ready to take advantage of this investment option. Moving to the next investment option that we also offer at Afri Invest is the equity investment. So this is one of our core business. You all know that Afri Invest Securities Limited is a licensed stockbroker, right? So one of our key products is offering a investment in equities. So how do you become a shareholder? As you all be asking, for those who don't know, is by buying a share of a company. So look at a company as a pie, right? So if you are buying into a company, it means that you are taking a slice of that pie or of that pizza box, right? So you're taking a slice of it. So it means that even if you're owning 1 unit of a shares company, you are a shareholder. And then what are the benefits of you as a shareholder? It means that you are also going to be getting what we call dividends. Yeah, now dividends is when a company declares profits and decides to share the profits with shareholders, right? So you're also going to be benefiting from that, and you're also going to be benefiting from price appreciation. So price appreciation is when you bought a share at 1 naira, right? And the share has appreciated to 2 naira. It means that you have gained extra 1 naira on that shares. So these are all the benefits that you gain if you are a shareholder. How do you quickly take advantage of it? How do you quickly become a shareholder? Is again, you can download AfriInvestor 2.0 app, sign up, do the necessary process, and then, like I mentioned, while onboarding you for FGN Savings Bond, you can get your CSA's account in 24 to 48 hours, which after that is done, you need to fund your account with as low as 1,000 naira. With as low as 1,000 naira, you can kickstart your investments. So if you say, okay, 2024 is almost wrapping up, let's begin in 2025, you can start putting money aside so that you can build your investment portfolio, and you will be glad that you did that. Now, speaking about the next investment option that we have, which is going to be AfriTrack. This is another interesting product that I also love so much. I love this product because it may seem as though you had lost money, right? So imagine getting the money that you had thought, I don't have access to that, or you've given up. You don't know where those monies are. And this product can help you to actually recover that money. A lot of, over time, people used to buy shares. Our daddies and mommies, they bought shares. They were given share certificates. A lot of them kept them. A lot of them misplaced it. And then, you know, they may be sad that, oh, I spent so much money in the equities market back then, and I don't even know how to go about it. This product is for you. This product is for your dad, is for your mom, is for that uncle that you know that is always lamenting about not knowing how to recover his lost shares and dividend. AfriTrack is going to help you to reconcile your outstanding shares. It's going to help you to unclaim all your claim all your unclaimed dividends. And also, if you had bought shares in different houses and maybe those houses have gone under, they are no more in existence, you don't know how to go about it, AfriTrack can help you to move those shares from the dead house and also move them to make AfriInvest, where you can consolidate your account and also monitor your investment at a glance. So if you have any relative that is lacking, or if you are experiencing this, if you fall into this category, please do not hesitate to email us at brokerageteam@afriinvest.com, and let's kickstart this process with you. Moving to our last product that we'll be discussing today is the FGN bond. So I know I have spoken about FGN savings bond. Now, let's look at FGN bond like for the big boys or for the big guys, right? I'm just saying, right? So FGN savings bond is an investment that is also issued and backed by the federal government. So now the difference here is that FGN bond is a long-term investment, while FGN savings bond is FGN savings bond is a short term because it's no longer than 3 years. So FGN savings bond pays the coupon twice in a year. Remember, FGN savings bond pays like 3 times in a year. So you need to note this difference so that when you're making your investment decisions, you know what suits you best. FGN savings bonds pays coupon 2 times in a year, and the minimum subscription, if you're going to the primary market auction, is 50 million. Well, if you want to buy FGN bond from the secondary market, it is 20 million and above. Yes, I've also said, I've talked about making bond investments as sort of a retirement plan. You know, look at it this way. If you're investing in FGN savings bond that offers, let's say 18%, maybe for 10 years, it means that for every year, you're getting 1.8 million. And this 1.8 million, they are going to be paying you half of it first 6 months, the other half in the first 6 months. You can take this money and invest in something else. You can take this money to sort out a need. You can even use it to pay fees, right? So FGN savings, and the payment always consistent, right? And then also, Sukuk bond is issued by the states. So we see a lot of projects, especially in Lagos and other states, right? That you see Sukuk bond raised by, by state. We see those billboards on the road. That is a state raising bond to facilitate.
Hello? All right. Thank you so much for hanging in. So sorry, I guess Margaret had a little network glitch. Um, so while she is still trying to navigate her way back, right, we are seeing a whole lot of questions already. And it's so good to know that everybody was following. We want you to hang in, we want you to hang on because all your questions will be answered too, and you don't want to miss out. If you don't even have questions, you can learn from other people's questions. All right, thank you. So we'll be going to the question and answer segment immediately. So we have Obina, though I can't see your name all through, but I can see Obina. So he said, so for instance, a company decides to do a share reconstruction after a shareholder had bought or purchased 100,000 shares at 10 naira per share. What would be the fate of the said shareholder? So I know Maiwa actually explained a little bit about this. So he will be taking us through this question and he will give answer to it. Thank you. Over to you, Maiwa. You're muted. Kindly unmute yourself.
Okay, thank you very much, Blessing. So Mr. Obina's question, so that I can quickly recap, is saying that if a company decides to do a reconstruction and the investor bought 100,000 units of that company at 10 naira per share, what will be the fate? So any company that wants to do a share reconstruction, they would actually announce how the share and construction will go. They'll tell you the units you'll be getting for the units you currently own. So for this particular question, let me just assume, because we don't have details as to what the company wants to do. Let's say the company wants to do a 1 for 5. It simply means that the total unit of shares you have, for every 5 you have, you get 1. So if you've bought 100,000 units of shares, it simply means that 100,000 divided by 5. So you would have 20,000 units. However, the price would increase also. So the price now becomes 10 times 5, which is 50. So if you multiply both 100,000 initially times 10 naira, it gives you 1 million naira. That's the market value of your share. Then if you take the flip side also, that's the post reconstruction, it gives you 1 million naira. That is 20,000 units times 50 naira. That's the new share price. You still have 1 million naira. So I guess that answers your question, sir. Mr. Obina Stanley.
Yes, thank you so much, Mayowa. Yeah, I know that that is very, very, very understandable. All right, so we'll be moving on. Before we continue taking up the questions on the chat, in case you have a question and you would really want your question to be heard, there's an opportunity for you to raise your hands right now. We'll call you, give you the opportunity to speak, and we will hear you out, and then we will answer your questions. So I will be taking another question right now from the chat. What is the range of rates on the Nigerian Treasury bill secondary market now? Range of rates on the Nigerian Treasury bill secondary market now. Okay, currently, we have different tenors on the secondary market. So like, Margaret spoke about the primary market and how that the auction is done. And we have 91 days, 181 days, and then we have 364 days. 182 days and we have 364 days. So, but for the secondary market, because various people want to sell back what they bought from the primary market, right? So we have much more tenors. Some people had held their own bond for maybe 30 days, all right? Some had held their own for 45 days. So we have different tenors, and the rates also, the when there is lower higher tenor, that is maybe 364, 360, 350, there is higher rate because you are being paid for waiting to hold that treasury bill for a longer time. But when you have like shorter tenors, like 30 days, 40 days, 25 days, the rates are always around, maybe let me say 10 to 12% as a discount rate at the discounted rate, while for higher tenors like 350, 340, we can have a range of 15% to around 19%. So I hope that actually answers your question. So we'll be taking another question. I want to see if are there any hands raised? Okay. Yeah, we have hands raised. So we have David Tanko Ishaya. Mr. David Tanko Ishaya, please, you can speak right now. Please, you can speak, sir. All right, please, can admin give them the opportunity to speak, please? You can unmute your mic, sir, and speak. All right, let's try. I don't know, Shuaib Abikon, whether it's a man, a woman. Mr. or Mrs. Shuaib Abikon, please, can you unmute yourself and speak? Okay, yeah, you can speak, please.
Hello, can you hear me?
Yes, Mr. Shuaib, we can hear you.
Yes, thank you very much for this presentation. I'm very, very impressed and well done. My question is this: how come the share reconstruction does not come automatically as a result of inflationary trend in the society, like many other commodities? I can explain if you want. For instance, I bought a share at 1 naira. When that 1 naira value in the market is I don't know how to compare it with another currency, but I can compare the inflationary trend to when the 1 naira cannot buy so many other things. So I'm thinking that the share reconstruction should come up to that share. So it becomes 5 naira when what 1 naira can buy 5 years ago can now only be bought with 5 naira today. And that's my question. Thank you.
All right, thank you, Mr. Shuaib. Mayowa, please, can you answer the question?
Good afternoon, Mr. Shuaib. So if I hear you correctly, you are saying that a share reconstruction should also factor in the inflationary trend in the country. Is that correct, sir?
Yes, it's correct. It should just rise up automatically like that. Yes.
Okay, so the share reconstruction basically is management decision. So management will sit down to see if they want to do a share reconstruction or not, depending on the reality on ground. So they are the one that will decide whether they want to do the kind of reconstruction they want to do. So they can decide to do one for 5 and maybe one for 3 or thereabout. So I don't really know if the management will take that into consideration or they won't. So it's management's decision, and they will be in the best position to actually explain some of the considerations they take into some of the considerations they look at before they take such decision. So inflationary trend or not is management discretion as to share reconstruction, sir. I hope I've been able to answer your question.
Yes, you have, but I'm not happy with it. So my Shuaib is a male person, and I've been a customer of your company for more than 20 years. So that name alone should appear on your screen when you try it. So it's a male, not a female. Thank you.
Thank you very much, sir. Thank you for sticking with us, sir.
You're welcome.
All right, thank you so much, Mr. Shuaib. For the inflation trend, don't forget that the market is still dictated by law of demand and supply. And just like even if inflation rate is currently on 37 and even enters 40%, that does not mean that the market will react to inflation trend, because it is both you and me that is in the market. So, and the market just moves with demand and supply. Reconstruction in its own self is just basically what is on ground. You just want to paddle it. You are either making the units go higher and then you are reducing the value of of the shares, or you are doing the inverse, making the units of the total outstanding units lesser, and then you are increasing the share price. So there is no way inflation wants to do into that, except you want um the the company to start manipulating their share prices or manipulating their shares. So the market is just basically demand and supply. So there is no room, or I don't think there will be any opportunity for even the management to start saying, okay, let us add up something because of inflation. I hope you understand. Thank you, sir. So we'll be giving another person to the opportunity to speak. I think I have Oluwaseun Adebimpe here. Oluwaseun Adebimpe, can you please unmute your mic and speak? We would like to take your question right now.
Good
Okay.
afternoon, everyone.
Yeah, good afternoon. Good
Okay,
afternoon.
so I'm new into this. I downloaded the Afri Invest app. So I just want you to, guide me. I've opened the app, but I don't know when it comes to buying shares in companies, which company is suitable for one to, because I see so many different ones there. How do you teach someone that is just beginning?
Okay, thank you so much, Oluwaseun. Thank you. We really appreciate your question. We've done a webinar on this prior, and I know that somebody on the host and panelist will be dropping you the webinar presentation on the link that will take you to how you can buy shares, sell shares, what you can buy, that will navigate you through. So you just want to like go over that webinar again, just like we are doing this. Any other webinar that comes may not be on reconstruction, and anyone that has missed this can always come back to this and check it out. So don't worry, just follow the link that will be dropped on the chat box, and then your questions will be answered.
Thank you so much.
You're welcome. So we'll be giving Adewale Anthony Adedokun opportunity to speak right now. Please, sir, can you unmute your mic and speak? Thank you.
Good afternoon. Can you hear me?
Clearly, sir, we can hear you. Thank you.
Okay. Yeah, thank you for the webinar. It was an excellent presentation and it's well enjoyed. My question is not strictly on although I know the topic is on share reconstruction, but I have other question on the investment, general investment. Are we allowed to ask?
Yes, sir, you can go ahead.
Oh, thank you very much. My question is actually on this banking reconstruction. I just want to have your opinion too, though I've been with Avrinvest too almost 5, 6, 7 years, and we have been working together. Now, this banking recapitalization, and I'm trying to look at what will be the effect of the recapitalization on the short to medium term for the banking stocks. We are looking at the dilutive effect. How strong is it going to affect the share price and perhaps the EPS going forward?
All right, thank you so much, sir, for your question. Mayowa will be answering that question. Hello, Mayowa.
Thank you very much, sir, for your question. So you are quite correct. You're looking at the dilutive effect of the recapitalization. It means that there will be more shares available to the investing public, and that increases the volatility on the stock. So in the short term, maybe in the short term, when those shares are credited, there will be a lot of volatility. So you might see huge fluctuation in the share prices. However, by the time most of the investors that have a short position in mind, that is people that just want to keep it for a while, once they get a particular spread or maybe margin on it, they would exit. Then finally, everything will balance up eventually in the long run. You have people that are long-term investors that will still hold on to the stock. Also, this capital recapitalization is for the banks to get more capital, right? They are raising more money, which they will inject into their business. And we've seen different banks telling us one of the different strategies they want to go into, different strategies they are pursuing as a result of this banking recapitalization. For example, at one of the investors called, Fidelity Bank did mention that they will be expanding their coverage across Africa. So that means that when their coverage is expanding, they might also be dealing with foreign exchange risk if the country they're expanding into has a relatively stable currency. So in the short run, there will be volatility in the market. While in the long run, if the company sticks to their strategy, which I believe they'll stick to it, it should impact their revenue and finally the bottom line, and they might be able to deliver even better performance. I hope I've been able to answer your question, sir.
Yes, thank you very much.
Thank you, sir.
All right, thank you so much, everyone, right? It's quite a very, very, very wonderful presentation we have had so far. Thank you for sticking with us throughout 2024, and we know you enjoyed today's webinar. You can always watch it back. You can go to our link on YouTube, and this webinar will just be seated down there, and we'll also send it to your emails. For you that we've not been able to answer your questions, you can always send an email to brokerageteam@afriinvest.com, like you can see it on my screen. brokerageteam@afriinvest.com. Your questions will be answered to appropriately. And if you dropped questions on the chat box too, your questions also will be attended to. Thank you so much for your time since January right now, and we are glad to have you. We pray that this festive season we are moving into will bring you more money to your account, and all that you wish for, God will answer. Thank you. Do have a great day ahead.